If we're entering the beginning of a bigger corrective cycle, which is possible, I'm not saying it is, but it is possible, we never know until we're actually in the midst of this thing, you're still going to get a rally here at some point because of these deep oversold conditions. Here's what you need to know before the bell this morning. So absolutely yesterday the Fed came out and reestablished a bit of the Fed put. Now what is that? The Fed put is a is a mythical belief. It's not really. Starting back in 2008 during the financial crisis, the Fed stepped in, of course, doing quantitative easing 1, and then of course we did quantitative easing 2, 3, 4, 5, 12, as we kind of went on. Every time the market would decline, the Fed would step in some shape, form, or manner, whether it was Silicon Valley Bank crisis or whatever it was, and kind of step in to support the markets. During 2020, stepped in with $120 billion a month in QE during the pandemic. All kinds of support for the junk bond markets, etc. We've seen this over and over again. And this is because as markets decline, what the Fed's concerned about is that will lead to a loss of consumer confidence that will impact the economy and potentially lead to some type of credit-related event within the economy that would impair the banks. So the Fed tends to step in during a moment of crisis. Now the problem with that is it's created moral hazard. Moral hazard is where investors now believe that they are insured against losses, and so now every time that the market goes through a minor correction like we just saw, everybody starts looking for the Fed to step in and kind of bail them out of excess risk taking. Now at some point, this is not a healthy aspect to the overall markets. We've turned the markets into a casino where people are taking on excess leverage and risk because of this moral hazard that the Fed has created now by stepping in to support the markets whenever markets decline. Well, yesterday, the Fed kind of sort of did that a little bit, and we'll talk about this in more detail, but they kind of stepped in yesterday, provided a bit of a Fed put. Markets rallied pretty sharply off of that. And again, we're getting very, very close to a buy signal here. So we've talked about this before, is that if we go back and look at time, when you have these signals at very, very low levels, those typically tend to be near market lows. And again, just like over the last 3 years, we haven't seen a signal on momentum at such a very deep level as we're seeing right now in the markets. And again, but historically, whenever you have these very deep signals, those have been near-term bottoms to markets. Now, it does not mean necessarily that you're off to the next major bull market run, but it does suggest that when you have signals and appreciated momentum as much as you have at this moment and such a deep signal, when that turns positive, that has been a decent tradable buy signal for the markets near term. Now, again, if we go back if you're in a longer term correction like we were in 2022, we saw those same type of signals. They gave you decent rallies to trade out of positions, to rebalance risk, reduce your exposure to markets, etc., before the market declined again, went to a new low, and then you got the next rally. If we're entering the beginning of a bigger corrective cycle, which is possible, I'm not saying it is, but it is possible, we never know until we're actually in the midst of this thing, you're still going to get a rally here at some point because of these deep oversold conditions. And we're starting to see these improve somewhat. Relative strength is picking up here. We're starting to see better performance across asset classes. We saw money flows yesterday tick up positive, and particularly coming back into the mega cap stocks, which have kind of been the market leaders as of late. They're doing a little bit better here. But again, this improvement in relative strength along with this potential buy signal here is a tradable potential if we get it. Now again, it's possible this morning futures are turning lower. We'll see. If markets roll back over here, again, we can keep this signal from happening. But if this signal triggers, that's going to be a pretty good entry point to add some exposure for a tradable rally. That's the key here. We may get a tradable rally back here up towards some level of resistance, but that'll give you a better opportunity to rebalance risk in your portfolio, raise some cash if you want. If you are worried about a bigger decline, you wait for that rally to kind of give you an opportunity to do that. So that's what you need to know before the bell this morning.